Hi everyone. Do you guys know which sector exploded the most in the US stock market last year? It was actually not AI chips, it was SMR, small nuclear reactor companies. Because of the AI data center, they consumed a lot of electricity. People start to see we need a nuclear plant because the other energy or renewable energies were unstable or they cannot provide the same amount of electricity like a nuclear power plant. So many investors and companies started pouring the money into this sector. But this year, the mood has been completely changed. They were both part of the same SMR theme, but both stocks got crushed. Um, by the end of this report, you will understand the three things. The first, the real cycle behind why the SMR industry exploded last year and got crushed this year. The second, why the two stocks in the same industry are moving in completely different directions. And third, how investors should decide whether invest right now or wait longer. Before we start, I post breaking market news every morning on my YouTube shorts. I strongly believe this will help your investment decisions, so please check them out and subscribe to the channel so you don't miss any of them. Okay, then let's get started. First, let's explain what SMR is. Once you understand this, you will see why the market was betting so aggressively on this sector. SMR stands for Small Modular Reactor. In simple words, it means a small nuclear reactor. A traditional nuclear power plant is a huge facility that can provide electricity for an entire city. SMR is like a mini nuclear power plant made by breaking the big system into smaller parts. Think of it like turning one giant desktop computer into several smaller tablet pieces. So why make it smaller? There are two main reasons. First, it can be built faster. Traditional nuclear plants are built almost entirely on site and construction can take more than 10 years. SMRs use factory made parts and assemble them on site like Lego blocks. That can cut the timeline by more than half. Second, they can be placed directly next to data centers. Large nuclear plants usually need to be built far away from cities because of safety concerns. But SMRs are designed to be safer, so they can potentially be built right next to data centers. And even if an accident happens, they are designed to cool down and shut themselves off. There is also less electricity loss from long distance transmission. So they can provide stable power 24 hours a day directly where it is needed. Because of these two reasons, SMR became one of the key words in the market starting last year. So who started this trend first? Four major big tech companies started moving into nuclear power within about a year and a half. Microsoft, Amazon, Google, and Meta. Let's go one by one. In September of year before last, Microsoft agreed to restart the closed Three Mile Island nuclear plant. This is the same site where the worst nuclear accident in US history happened in 1979. Because of that trauma, nuclear construction in the US basically stopped for a decade. But now Microsoft wants to turn that plant back on. That shows how desperate big tech is to secure electricity for AI training. The following month, Amazon made its first 500 million investment in X Energy, an SMR company. Amazon also partnered with the Dominion Energy to build an SMR power plant in Virginia. Around the same time, Google signed a deal to buy a total of 500 megawatts of power from Kairos Power, another SMR company. The target is start to turn operating in 2030. And finally, Meta. On January 9th of this year, Meta agreed to jointly develop a 1.2 gigawatt nuclear power site with Oklo, an SMR company. The site is in the Pike County, Ohio. All four big tech companies moved, but here is one thing we need to point out. Why nuclear power? Because AI data centers cannot go down for even 1 second. If a model being trained suddenly stops, days of computing work can be lost. These data centers consume electricity the same way at 3 a.m. and 12 p.m. Power that runs steadily 24 hours a day is called base load power. In easier word, it means always on electricity. Solar does not work at night, wind power stops when the wind does not blow. Neither one can fully provide always-on power. Natural gas can run 24 hours a day, but carbon emissions are the problem. Big tech companies have all made carbon neutral promises. So in the end, there is only one power source that is stable 24 hours a day, does not produce carbon while generating electricity, and can be built on a smaller site: nuclear power. More specifically, SMRs that can be placed next to data centers. The market message changed and SMR stocks exploded. Oklo went public on New York Stock Exchange in May of the year before last and later hit an all-time high of $193. Compared to its first day starting price of $10, that was about 19 times the rally. NuScale power was also climbed to an all-time high of $57 around the same period. Both stocks became some of the hottest names in the US stock market last year. Everything looked perfect until less than a year later. This year, both stocks started falling apart. Oklo hit all-time high of around $194, but now trade in the mid-$70 range. That is about 64% drop. NuScale power fell from $57 to $13. That is about 80% decline. They were part of the same SMR theme, but both were hit hard. So what did the market start questioning? Three things. First, the promises were huge, but actual operation is too far away. Even the Meta Oklo agreement targets first operation in 2030. Investors have to wait for 4 more years. During that time, revenues almost non-exist, while costs keep building up. The market suddenly started taking this issue seriously. Second, regulatory risk. SMRs need approval from the NRC, the US Nuclear Safety Agency, before they can operate. The NRC is the government agency that decides whether a nuclear reactor can run in the US. Getting this approval usually takes 5 to 7 years. If the promised 2030 operation gets delayed again, investors will start questioning whether the company has enough cash to survive until then. Third, competitors start moving fast. Before SMRs could be built, natural gas and existing power companies started taking the data center market first. One major example is Vistra, ticker VST. In January of this year, it secured a 20-year nuclear power supply deal for 2.6 gigawatts with a large customer. It also announced a $4 billion acquisition of 5.5 gigawatts of natural gas asset. Constellation Energy, ticker CEG, is also already securing long-term contract with Microsoft and Meta. So what is the difference? SMRs are 2030 at the earliest, but Vistra and Constellation can supply power right now. The market started asking a serious question. Do we really need to wait 5 years for SMRs? Wouldn't it be faster and cheaper to use electricity that can be supplied right away? That is the real reason SMR stocks collapsed this year. The market had pushed aside the question it should have asked for the beginning. Then investors started looking at those issues again. But from April to May, positive news started coming out one after another. Several major events arrived almost at the same time, and they started easing the market's doubt. On April 16th, US Energy Secretary Chris Wright made a major statement in Congress. He said the first 5 to 10 nuclear reactors would almost certainly receive direct loan support from the US government. The market applied this signal to SMR companies as well. Investors believe NuScale would likely be included among the key candidates. This was an official sign the US government was ready to support nuclear funding. 1 week later, on April 23rd, Oklo announced a three-way partnership with NVIDIA and Los Alamos National Lab. On the day of the announcement, Oklo stock jumped about 16%. So what does this mean? Developing nuclear fuel usually takes years. The plan is to use NVIDIA GPUs and AI models to run simulators and shorten that timeline. Los Alamos is the same national lab that helped create the first atomic bomb during the World War II. In other words, the top-level US government nuclear expertise is now standing next to Oklo. The very next day, on April 24th, Amazon-backed X Energy, ticker XE, listed on the NASDAQ. It started with an offering price of $23 and a market value of about $9.1 billion. On its first day, the stock jumped 27%, pushing its value to about $11.5 billion. It was the largest IPO in US nuclear history. This was a sign that fresh money was truly starting to flow into SMR industry. On May 6th, the NRC approved Oklo's Aurora power plant design plan on an accelerated schedule. This means the review process, which normally takes 5 to 7 years, will move faster. This was real progress in the regulatory area that investors were most worried about. The next day, NuScale confirmed in its first quarter earnings report that the TVA 6 gigawatts SMR agreement it secured last September was still alive. This is one of the largest single SMR program opportunities in US history. However, in the same report, first quarter revenue came in 96% below market expectations. Why? Because last year, NuScale received a large one-time payment from the Romania project. That money ended and new revenue has not started showing up yet. That is why the stock dropped after hour. On May 11th, JP Morgan started official research coverage on Oklo for the first time. Why is this important? When a major Wall Street bank officially starts covering a company, it is almost like a signal that the company has become a serious investment target. JP Morgan starting coverage means major banks are beginning to take SMR companies seriously. Within just 1 month, the government, AI companies, regulators, and Wall Street all moved. If last year was the time of promises and the beginning of this year was the time of doubt, then from now on the real test begins. But even inside the same SMR theme, these two stocks are moving in completely opposite direction. Let's look at them one by one. First, Oklo. Oklo is a California company founded in 2013. There is one important fact. Sam Altman, the person behind OpenAI, helped bring Oklo to the US public market. He's still one of Oklo's major shareholders. In one sentence, Oklo is a nuclear company made by Silicon Valley. Oklo is clearly a private money story. It has 3 key weapons. First is the 1.2 gigawatts agreement with Meta. The project is planned for Pike County, Ohio, with first operation expected from 2030. Second is the three-way partnership with NVIDIA and Los Alamos National Lab. This partnership focuses on using AI to reduce the time needed to develop nuclear fuel. Third is the NRC accelerated review approval on May 6th. This is a major sign of progress in the regulatory area the investors were most worried about. There is one more important variable. Oklo's short interest is around 16% to 19%. That is among the highest level in US utility-related stocks. So it means many investors are betting that this company will eventually fail. But ironically, that can turn into positive catalyst. If another strong piece of good news comes out, short sellers may be forced to buy shares to close their positions. That can create a short squeeze and send the stock sharply higher. But Oklo's weakness is also clear. It still has not received full NRC operating approval. It received accelerated review approval on May 6th, but that is not the same as final approval. This remains the biggest risk. Now let's look at the NuScale Power. NuScale Power was founded in Oregon in 2007. There is one interesting thing here. NuScale tickers SMR. It is the same as the name of the sector. That shows how much this company represents the SMR market. There is one more key difference. NuScale is only a SMR company in the US that has received NRC design approval. In a field where approval is one of the biggest barriers, NuScale is the only company that has already crossed that wall. NuScale is clearly a government money story. It also has 3 key weapons. First is it directly connects with the government. In April, the US Energy Secretary said government loan support would go into the first 5 to 10 nuclear reactors. Chris Wright directly named existing nuclear reactors, but the market viewed NuScale as one of the key possible winners from this policy direction. Also, the TVA 6 gigawatt SMR agreement that NuScale secured last September is still alive. TVA is a US government-owned power company. Second is a real first commercial plant. This is the raw power project in Romania. In February of this year, the final investment decision had already been made. Actual operation is expected after 2033. If it succeeds, it could become one of the first real operating examples in the SMR industry. Third is progress toward a long-term power contract. This type of contract is called PPA. It means a buyer agrees to purchase electricity from a power plant at a fixed price for a long time. This is the key path for real revenue to begin. NuScale CEO John Hopkins said he expects the PPA process to be completed by the end of this year. But NuScale also has a weakness. In November 2023, its first SMR project with the Utah Public Power Group was completely cancelled. Local power companies hesitated to join, construction costs surged, and the project was eventually shut down. So how does the Wall Street see these stocks? On May 11th, JP Morgan started research coverage on Oklo. Its price target was $83, which means about 11.5% upside. But around the same time, other firms gave price targets to $120 to $130. So JP Morgan is one of the more conservative voices on Wall Street. On the other hand, JP Morgan has not started coverage on NuScale yet. But other Wall Street consensus price targets are around $16 to $20, compared to the current stock price is about $13. That means about 35 to 60% upside. Just by numbers, NuScale has much larger upside than Oklo. To summarize, Wall Street is starting to take Oklo seriously, but the first major view is still careful. NuScale has larger upside potential, but major banks have not fully entered the story yet. For both stocks, Wall Street's view is not simply good news. So how should investors look at this? Let me give you 5 key checklist items from everything we discussed. First, cash strength. Meta Oklo's first operation target is 2030. NuScale's Romania raw power project is expected after 2033. Until then, both companies will have very little revenue while costs continue to pile up. The number one question is whether they have enough cash to survive. Checking cash balance every quarter is essential. Second, NRC progress. Oklo received accelerated review approval on May 6th, but it still does not have full operating approval. NuScale already has NRC approval. That difference directly creates a timing gap. Additional progress on Oklo's final approval would be a positive signal. Third, the speed of long-term power contracts. NuScale's CEO said the PPA could be finalized by the end of this year. Since this type of deal is the first real signal of future revenue, whether that contract gets completed will be critical. Fourth, Oklo's short interest is around 16 to 19%. If strong positive news comes out again, the stock could surge through a short squeeze. But if another negative event happens, the share price could fall even faster. It is like double-edged sword. This is one of the key drivers of short-term volatility. Fifth, the timing of SMR cost disclosure. This means the cost of power generation per megawatt. SMRs need to prove they are economically competitive against companies like Vistra and natural gas power producers. The moment this number is revealed could become the key turning point where the market revalues the entire SMR industry. Let's wrap it up. The SMR market is not just a simple nuclear sector. It sits right in the middle of big trend of AI data center electricity shortages. Last year was the time of promises. This year is the time of verification. And the positive news that came out from April to May is being read by the market as the first sign that the industry may be passing that test. But here is one very important point. These two companies are still in the stage before meaningful revenue begins. Oklo had no first quarter revenue. NuScale's quarterly revenue is still very small. Real revenue will only begin after the first SMRs start operating after 2030. So what moves these stocks? Accounting numbers do not mean much yet. Instead, the stock price moves based on when and where the next positive trigger appears. If a new contract with a big tech company like Meta comes out, the stock can surge. If NRC approval moves one step forward, the stock can rally. But if one project gets delayed, the share price can crash. That is how early stage growth stock moves before revenue becomes meaningful. So when looking at these names, the ability to see where the next catalyst may come from is extremely important. That is why the five variables we discussed matter. They are not just a simple checklist, they are like a telescope that helps you see where the next trigger may appear. The risks are the same for both companies. If there is another stock or economy issue you want to learn more about, please leave it in the comment. I will analyze carefully and break it down to the next video. Subscribe, turn on the notification, and let's move together toward financial freedom.